And now I'm going to transfer over, well, first actually, I'm just going to make some announcements, and then I'm going to transfer to you, Matt, the host control. So guys, everyone, thank you very much for joining us. Thrilled today. Matt Wilson is doing his second presentation for the group. Those of you who attended the first know that we are graced with someone who not only has a thorough understanding of the subject matters that he covers, but also, and more importantly, is able to communicate that. I just want to say one or two group announcements before I turn over host to Matt for today. First of all, we're at 3,300 members. Awesome. Thank you very much. We're approaching, we're going to quickly approach 4. Anyone you think that may benefit from this group that is a professional in real estate, please add them. Secondly, I'm putting a general notice, as I do for every video that we take on, that while our group is private, our videos are public. Anything that is said and any questions that are asked are put out on public forums for the general public. So please be advised. Last, I would ask that everyone please mute their own microphones, as it is quite frustrating as we go through this. I'm actually going to take a second and just make sure that everyone is muted and that we have our right preferences set this time so we don't get interrupted. Bear with me. And then I'm going to transfer this over to Matt so we can get going. Hold on, please. Mute all. There we go. Continue. Good. Everyone is muted. And Matt, we're going to unmute you because it's kind of important that you be unmuted, I would think. There we go. And now, Matt, I'm going to turn this over to you. Give me a second. Host control is being switched. Okay. Matt, all yours.
Thank you. Thank you, everybody. It's a pleasure to join you today. Let me just get my screen sharing started here. There we go. Hopefully everyone can see that. I just put up a slide. It's my pleasure to speak with you today about something that is a topic that a lot of people always seem to have questions on, and that it's HST in relation to farmland. And I'm going to talk not just about farmland, but briefly other types of property where you might find HST applicable. Of course, the general caveat, this isn't legal advice. I'm also not an accountant, so I always typically say if you're dealing with taxes, talk to an accountant. For those of you who don't know me, my name is Matt Wilson. I am a lawyer at Siskins. We have offices in London and in Toronto. I am coming to you right now from my home in London, Ontario, and as you can imagine with London, those of you who know southwestern Ontario, we are surrounded by a lot of farmland and a lot of farms, and we do a lot of farm-based transactions. So on that note, I will get into it. I don't have that many slides to go through, but hopefully this is going to be informative for you, and I'll be happy to try to answer any questions that you might have at the end of the presentation. So as a starting point, the government loves taxes. That's the starting point. HST applies to every transaction unless there's a specific exemption. The most common exemption that realtors are used to, that people who buy and sell homes are used to, is what's commonly referred to as the used residential property exemption. When you're buying or selling a home, that it's not a home being sold by a builder, that someone has lived in it, the HST has already been paid on it at some point, if HST was in effect at that point in time, that there's been no input tax credits. Basically, your resale residential transactions. That's the most common exception, but it is an exception. The primary rule, again, is HST applies unless you squarely fall within one of the exceptions in the Excise Tax Act. Where this comes into play with farm property in particular is you can have a large property that, 100 acres, 1,000 acres. I once met with a farmer out in Manitoba. This was up in northern Manitoba, and she and her family actually own 220,000 acres, which you can imagine is a incredibly large farm. But of course, farm values in Manitoba are also nowhere near what they are here. Also, this was in northern Manitoba, which has some agricultural challenges that we don't have as much here. We don't see 220,000 acre farms around this part of the province. So let's say we have a 100-acre property. It has a farm on it. It has also a farmhouse on it. What happens is when the sale is of a larger property, 100 acres, 2 acres even, the government through CRA, through the Excise Tax Act, looks at it as two separate sales. So there is a sale of the residential component of the farmhouse, and there's a sale of everything else. And the allocation of the price must be made between the two of them. So what is the farmhouse? Let's start with that. The transaction relation to the farmhouse, which again is used residential property, is likely exempt from HST, is seen as the land around the farmhouse that is to be used for the reasonable and necessary use and enjoyment of that house. This is usually set at about a half of a hectare. Yes, we're using metric, a half of a hectare, which is just over 1 acre. So you can just think of it as 1 acre. It's about 1.1 some odd acres. The reason it's a half hectare is actually not found in the Excise Tax Act. The Excise Tax Act is what governs HST. It's actually found under paragraph 54E of the Income Tax Act as the definition of a size of land necessary for use and enjoyment of a house for the purposes of a principal residence when it comes to principal residence exemptions from capital gains tax. So the government has basically used this half hectare rule in relation to land in general. It's important to note that if a legally imposed minimum lot size exists, so let's say you are in a situation where a minimum lot is 5 acres because of zoning or other provisions such as that, an argument could be made that it's the value of that 5 acres around the house that could be used. Again, it's an argument, and you would talk to an accountant before figuring all that out. The safe bet is to go with the 1 acre around the house. And then what you have to do, of course, is apportion the sale price between the two sales. How do you do that? Well, you look at fair market value, you have some sort of documentation, but effectively you're at, okay, if this 100 acres is being sold for, $750,000, maybe 400 of it is for the house and the 1 acre around the house, the rest is for the farmland. However you come to that distinction, it has to be justifiable if it's audited. So make sure that there's some reason behind the allocation between the two. Of course, the value attributed to a exempt residential sale would not be subject to HST, and then we get to the question of what happens with tax on the other part of the property, the excess part of the property, the part over that 1 acre. So what does happen? Well, the first question I always ask is, who owns the property, because that matters, and what's the property used for? And before getting specifically into farmland, I just want to talk about vacant land in general, or as the exemption in the Excise Tax Act calls it, personal use property. So there is an exemption in the for HST on what they call personal use property. It has to be owned by an individual. So if it's owned by a corporation, if it's owned by a partnership, trust, etc., that doesn't qualify for the personal use property exemption. To be exempt, like I said, the seller has to be an individual. The land must have been kept for personal use. Personal use is defined as non-commercial use. So you cannot have owned the property with the intent of using it to make a profit or to try to make a profit. The land cannot have been primarily used in the business. Primarily, again, is 50% plus 1. It's just the bright line rule the CRA looks at 50% plus 1. If 50% plus 1 of the property is used for a commercial purpose, then it's not personal use property. The sale cannot be occurring in the course of a business. And this is where a lot of people who flip houses sometimes or flip properties get caught. Because if I'm buying land on a speculative basis for the purpose of reselling that land, then technically I am selling land in the course of a business, which would then kick me out of the exemption and the transaction would be subject to HST. Also, the sale cannot be part of a parcel created by subdividing a parcel into more than 2 lots. And this is not more than 2 lots at once. This is more than 2 lots, period. So you can have someone who owns a property, and in 1985 they sever off a piece of it and they sell it, and potentially not subject to HST. And then they sever off another piece of it today, and that would be subject to HST because the personal use exemption wouldn't apply because that land would have been severed by that owner into now a third parcel. There are exemptions. The exemptions are primarily in the context of transferring those newly created parcels to family members. So if you take a property and it's vacant land and you sever it into 4, so now we're more than 2, so HST applies, but one of them or 2 of them are being transferred and sold, because remember HST is on value of consideration, so sold, not gifted, sold to a family member, even though HST would have applied because there's been more than 2 severances. If it's sold to a family member for their personal use, then there is no HST on the sale to the family member. And by family member, when I say family member throughout any of this conversation, what I'm referring to, of course, is a related person. It's an Income Tax Act definition. Some people refer to it as non-arm's length. The tax term is related person. It sort of is a matrix that you can follow on who is related to whom and who is not. But effectively, it is looking at horizontal and vertical by blood or by marriage or by adoption. So you are a related person to your parents, your grandparents, your children, your siblings, not to your aunt or uncle or niece or nephew, because that would be diagonal, not vertical or horizontal. You can also be related to a corporation. If you own all the shares of the corporation, if you're controlling mine of the corporation, there's a different test when it comes to play about whether you can be related to a corporation, but corporations are people too. And therefore, corporations can be related to people, to individuals. Individuals can be related to corporations. Corporations can also be related to each other. So that then takes us into what people are actually here to hear me talk about, which is farmland. So let's first talk about what is farmland, because there are some special rules around HST as it relates to farmland. So farmland generally means land that is regularly used by a person. Again, this is person using the very broad term of person, for the purpose of gaining or producing income from a farming business carried on by the person. So it's basically as you would think it is. It's land owned by someone for the purposes of farming. And farming also is a very broad definition. Farmland also includes any unfarmable land that's part of the farm property. So a lot of times you'll have, brush, you'll have, some sort of wooded area, gullies, maintenance, drains, etc. Excuse me. That cannot be actually farmed, but as part of the farmland. It is part of farmland for this purpose, as are any chattels or fixtures on the farmland, so barns, shops, etc. That is part of farmland because fixtures are part of land. I mean, that's a fairly basic principle. So, sale of farmland by individuals. A farm, by its very nature, is intended to make a profit, or at least to seek the ability to make profit. There's a hobby farm, perhaps, that is different. I'll get into that in a second. But most people who are in the business of farming are in the business of trying to make money from farming, meaning that the previously noted personal use exemption doesn't apply. Because remember, that exemption only applies if you are not using the property primarily for business purposes. So the sale of farmland is usually subject to HST. And again, remember, if there's a farmhouse on it, you can split that off as it's basically viewed as 2 separate transactions for tax purposes. But the farmland part is subject to HST with a couple of exceptions. The main exception is if you are selling your farm property to a related person who is using the farmland for the buyer's personal use and enjoyment. So not for the commercial, for commercial use or for farming. So you have a farm that is owned, by mom and dad. They're getting out of farming. They sell the farm to one of their kids. The kid has no intention of farming the land, but they're going to buy it, just use it as a nice big rural property. That would be exempt from HST. If the child is buying it to farm the property, though, then it would not be exempt from HST. There's also a possible exemption of the sale of the property if the sale of the property is part of a larger sale of the farming business itself. In that situation, both the farmer and the purchaser can jointly elect to have no HST payable. This is a very limited exception. I would not suggest not relying on this exception, and I would suggest that everyone seek, again, accounting advice, because this is in a bigger picture HST exemption. Again, the exemptions of PLUV only apply if the property is used only for farming, because that would have to make it a farm. If you use it for farming and for other non-farming purposes, then it would take it out of these exceptions. Hobby farms. So a hobby farm, someone buys a property, they might want to, as a hobby, do some farming. But they have absolutely no expectation to make any profit. They're not making any profit. CRA views it then as the land not being primarily used in a business. So it would then fall back under the general vacant land or personal use property rules. So therefore, if it's owned by an individual, it's a hobby farm, they're not making money off of it, they don't intend to make money off of it, the sale could still be HST exempt if they qualify for the exemption under the personal use property exemption. One note, leasing out the property is a commercial use. It's not necessarily a farming use, even if your tenant is a farmer, because if you're looking at the owner of the property, the owner is not directly farming if they're leasing it out to a farmer. It also, if you're leasing out the property to a farmer, you're no longer using the land just for personal use, and would also get you out of the personal use exemption. Now, there are some ways to look at potentially structuring an arrangement that would keep you as qualifying as a farmer, such as a sharecropping arrangement, but those again would require review by a tax specialist to go into all the minutiae. Just remember, a leasing of the property to a third-party farmer for leasing, you are making money off of the land. You're using the land in the course of a business. That business is the leasing of land in that case, and therefore the exemptions would likely not apply. So that is sale of farmland by individuals. What happens about the sale of farmland by corporations, et cetera, partnerships, et cetera? Almost always subject to HST. Personal use property exemption is not available to fall back on. There is one exemption that is very limited and almost never used, but it does come up. It can be exempt if the corporation sells the farmland to a related person. So again, this is someone who's related to the corporate owner or partnership or trust. The person buying the property must be actively engaged in the seller's business of farming. So as opposed to the individual exception, which is you can just basically sell it to any related person, and as long as they're using it for just for personal use, then there's an exemption you can look at. In this case, the buyer has to actually be actively engaged in the seller's farming business. And then also, same as before, the buyer must intend to use the farmland only for personal use and enjoyment. So they can't continue to farm it, they have to use it for non-commercial purposes. So where this could come in is, for example, you have a corporately owned farm. It could be a family business. You have one of the family members who is related to the business, again, making sure that they meet that related person test. And the farmland, the corporation, the owner of the corporation, they're winding down the corporation, they want to hold on to property. The farm corp sells the land to the actual sole shareholder, let's say, of the corporation, who is now going to be using the property just for personal use and enjoyment, no longer to farm it. And they were actively involved in the farming before the transaction took place. So as you can see, it's a very limited exception, but it is there. So I needed to mention it. So effectively what we have is a couple key takeaways. HST always applies unless there is an exemption that the transaction fully satisfies. Part satisfaction, no good. Must fully satisfy an exemption. Because remember, the primary goal of the tax scheme in this country is for the government to raise money through taxes. So if you're going to want to argue that the taxes don't apply, you have to squarely fit in the box that says, if you fit into this box, you don't have to pay the tax. Seek advice from an accountant. And then one point that this is something that does come up, and this is something I didn't really have a place earlier to put it, so I'm putting it here. If the buyer is an HST registrant, this could be a corporation, could be an individual, the buyer must self-report and self-remit to the HST as CRA. So the HST is actually not paid to the seller on closing, but HST payable is taken care of through the buyer's HST process. If the buyer has input tax credits available, they can look at leveraging those to offset what their actual payments will need to be. That's something that they do with their accountant, not with their lawyer. It's important to remember this as well, because the seller, of course, if they collect the HST, is required to remit the HST to CRA through the tax filings, even in land if they are not an HST registrant. That's one of the situations where if you're selling something or making a supply, using the language in the Excise Tax Act, that you actually don't have to be an HST registrant, but are still liable to collect and remit HST as with real property. And these get into, of course, the difficult conversations of, well, someone put that HST is included in the purchase price, but really HST is applicable. And then you have a purchaser who is an HST registrant who then says, well, notwithstanding the fact that this agreement says that it's X dollars, I'm actually giving you that X dollars minus the HST that is built into that X dollars because it says that HST is included in. And therefore less money changes hands on the closing date. The small supplier exemption that you might hear of in other businesses where you have to sell over a certain amount to have to remit HST also doesn't apply with land. It really is a regime where HST always applies unless there's a specific exemption that says otherwise. So be careful when you're putting together agreements of purchase and sale. Of course, if you're acting for a buyer, you pretty much always want it to say HST is included in the purchase price. The seller wants it to be HST in addition to. I mean, that's the big battle always. Keep in mind that the OREA standard form commercial agreement of purchase and sale, there is no fill in the blank line to add in addition to or included in. The default pre-printed is in addition to. You can always add something to a schedule if you want to change that if the parties agree, but just keep that in mind. If you don't see a blank in the OREA form, that's because there is no blank on the commercial OREA form. Remember that we're dealing with potentially dividing a sale price between two properties for allocation purposes. And that's something that for a value setting point of view, the buyer and seller may disagree on how that allocation is made. But it is something that the parties will need to come to agreement on. We might need support from a realtor to help provide some sort of opinion on what fair market allocation between the two parts of the property are. I think what I'm trying to say is HST, when it comes to farmland, when it comes to vacant land, when it comes to land in general, sometimes, a lot of times, is not as straightforward as a lot of people think it is. If you have any questions, ask before you have a firm agreement of purchase and sale. Ask the accountant, ask the lawyer. If the lawyer doesn't know what they're talking about, hopefully you're talking to a lawyer who's smart enough to say talk to an accountant. I mean, lawyers, even those who practice in real estate, a lot of us, I mean, all of us aren't as well versed in taxes as an accountant is. A lot of us know enough to know what we know and what not we don't know, but there are also a lot of lawyers out there who really don't understand HST, especially when it comes to properties they don't typically deal with. Just like there are a lot of accountants out there who might not understand the impacts of land transfer tax, but that's a discussion perhaps for another day. But always ask, always be proactive, seek out your resources. If anyone has those questions, you can reach out to me. I said an accountant's also a go-to for this sort of thing. And that is the end of my presentation. My contact information should be on the screen now. And I'm happy to answer questions or to do whatever I can to assist.
Amazing, Matt. I'm just going to make a small little plug for you for 1 second before questions come in, and we'll give people an opportunity as well to ask questions. I just want to point out to people that if this seemed a bit complex, it's because it often can be. And having a lawyer that specializes in this area is critical. When I get questions about farmland, when I get questions about vacant land, I often refer to people such as Matt who have stated expertise in the area. And I would strongly suggest that you do not just use your normal real estate. Matt's a bit too kind to say this, but I'm a normal real estate conveyance lawyer. I know what I know and I know what I do not. And I will speak for those of us who don't regularly deal in this field. Going to someone like Matt for these types of deals, it's worth its weight in gold. So I know that this isn't supposed to be an advertisement for Matt and his services, but I figured I would throw that out just because you guys have seen exactly how complex that can be today, and it's worthwhile just giving that shout out now. So I apologize for interrupting, and I'll go back to questions.
Well, thank you for that, Mark. I'm happy to answer any questions. Of course, if you don't want to ask them publicly, you can email me, give me a call. I'm happy to provide knowledge or put a message onto the Facebook group, and I'll be happy to do what I can there as well. I mean, share their wealth of information.
Yeah. You may have answered all the questions, Matt.
Or people are totally shocked and you know, they're turtling somewhere, which is fine too. They'll come out eventually and reemerge.
I actually think this is one of the most valuable presentations that we could give, because unlike other things that you can look up without actually having someone bring you through it, it's very difficult stuff. So as always, Matt, with your permission, we will be posting this on our forum, and we will have people review that as well. And I guess I'm going to just give 1 more second to see if there's any other questions, and if not, I'll make a thank you. No, just a lot of thank yous and great information in the chats. So Matt, again, thank you so much for sharing your expertise and your knowledge. Guys, please use Matt. He doesn't only know this stuff, he practices in it. Great stuff here. And no doubt you can see that just in what has been shared today. Oh, wait, we do have one question.
Yeah, so there's a question about HST determined by the vendor. What I will say is HST is determined by the vendor's use of the property as well as their history of the property. But of course, the purchaser should also satisfy themselves as to the applicability of HST and some of the information you can't get up front. For example, if a seller has claimed input tax credits in relation to the property, that can kick it out of exceptions, including, by the way, the used residential property exception. And there's really no way of determining whether or not they claimed input tax credits in relation to the property without them volunteering that information. But it is, again, the use, except on this, the couple of farmland exceptions that I talked about today, where the intended use by the purchaser matters. What primarily matters is how the seller used the property and their history with the property. That's the information that you need to determine, and hope sometimes it's not as easy to get as you'd hope it is. But again, it goes back then to first principles of HST always applies. On closing, as a lawyer, we get statutory declarations and other documents from the seller about whether HST applies or not, of course.
Wonderful. Okay, guys, so I think we'll bring this to a wrap now. Oh, sorry, I think Taze is asking one last question, Matt.
Yeah,
So
I think it's a follow-up around if someone rents it for camping or some other non-permanent use. It comes down to primary use of the property. So 50% plus one of the use when you look at it as a whole. But you're right, there are a lot of times when you cannot tell from an inspection of the property what it's being used for. I mean, the property itself could be leased out fully on a full year basis, and you might not be able to know if you inspect it at a certain time. So make sure you ask the questions, get the information. And again, if you're acting for a buyer, you're going to want to try to negotiate HST being included in. And then if they say no, it must be in addition to, then it also triggers you to ask those questions of, well, why do you think it's in addition to?
Can I ask a quick question, Matt?
Of course.
From an OREA perspective, if you're dealing with a non-hobby farm, what is
Mhm.
the appropriate form to use? Is it the form 500, or you may not know the answer to this offhand, but is it the form 500 or 100? And the reason I ask that is because the commercial OREA form doesn't give the option of HST. It simply says HST is in addition to, whereas the normal residential form, the form 100, does give the option of electing included in or in addition to.
Yeah, for me, if you're buying or selling farmland that is, not just a hobby farm, then yeah, I would definitely be recommending the Form 500, the commercial form, because it is a commercial property that you're buying. I mean, it's not fatal if you use the residential form. You can use a residential form in the commercial transactions, and I mean, conversely, if you really wanted to, you can use a commercial form in the residential transactions. There are some differences, but they're not markedly different. The main difference for most people note is the HST clause. But even if it's pre-printed on the commercial form, it says HST is in addition to. There's nothing that says you can't put a clause in the schedule that says, notwithstanding the pre-printed form, the parties agree that HST shall be included in the purchase price.
Great. I think Harpreet asked you a question as well. I'm sorry, I don't mean to keep on dragging into different questions, but
No, resources on crop share agreements. I can't think of any off the top of my head, but if I find some, I can put them up on the Facebook group. Um, the the crop sharing agreements are something that are typically put together by accountants or farm consultants. Again, it's important that also not every accountant necessarily has experience in dealing with farmland and farm properties as well. Um, so I mean, look at those, but if I find resources, I will provide them. There's also a question I see about if an individual can register for HST if it doesn't have any business and is only registering for the purpose. I understand from talking to accountants that technically, yes, you can, but really there is no benefit for doing so, because then instead of writing a check to the seller, you're writing a check directly to CRA because you don't have anything to offset your HST liability. The main reason of that, um, people who buy HSTable property, who have an HST registration, if they buy things that they pay HST on, they can claim, they have input tax credits, they have other credits that they can offset their HST liability. But if you don't have any of those abilities, then effectively there's no point of registering as an HST registrant if the only reason you're doing so is because you're buying the property. Now, of course, that's what I've been told by an accountant. I've also been told by someone, though, that if you're just registering, if you're just buying to register for the property, you actually can't register for HST. Most people wouldn't register if that's the only reason they're doing it. Yeah, I mean, for these, when it talks about input tax credits and everything, make sure to talk to an accountant. I'm not an accountant. It is an obligation to self-assess and self-remit. It's under Section 244 of the Excise Tax Act. One of those sections I happen to know off the top of my head. It's actually a section that says if the purchaser is an HST registrant, the purchaser must self-assess for HST. They actually are not allowed to pay the tax to the vendor to remit. But beyond that point, this is where I say again, talk to an accountant.
Matt, last question for you. If you can just turn your attention to Ashley's question, just above Harpreet's, and then we'll call it for the day.
Ashley's question: in the case of using it for camping, would you suggest putting something in the offer that seller says that it's not HST applicable? Camping, unless of course you're renting it out for camping. Camping is usually could be seen as a residential use, depending on, of course, what the nature of the camping is. So I would classify that as such. Again, it's a case-by-case basis. A lot of this is fact-specific. But if HST isn't applicable, then you could add that to the offer. Like I said, it's a fact discussion. The risk, like I said, is on the seller. If it says HST is included in, the risk is on the seller if HST is applicable. And if it says HST is in addition to, then the risk is on the buyer if HST is applicable, right? So it really comes down to risk allocation at that point and what the parties are both comfortable with.
Great. Matt, thank you so much for this. Guys, I just want to point one thing out. In 6 days, we are going to be inviting Protect Your Boundaries to join us. They're going to do the next presentation, and they're going to be doing a presentation on how to read a survey, which has been something that we have quite a few people who have asked for over the course of months. I'm thrilled that they're going to join us. I think it will be very useful for every single person to actually engage with that, and all of your questions can be answered at that time as well. So Matt, bringing it back to your presentation, thank you again for your time. Sincerely appreciate your expertise. Everyone, please use Matt or an equivalent lawyer who has the volume of knowledge that he contains in his pinky finger for the purposes of these types of deals. Obviously, he supports our group being able to support him right back is obviously advantageous and makes for a virtuous circle. So thank you, Matt, for everything today. And if any of you have any further questions, undoubtedly Matt would be happy to answer them offline.
Thank you all. Have a great day.
Take care.